Hi there everyone and welcome to Buy Now Sell Now Weekend. I'm Avan Dabas. Joining me is Mubina Kapasi, and over the next half hour we're going to answer your queries as well as get you expert advice as to what to do with your portfolio as well. So let's just tell you what we will be discussing today on the show. We've got plenty of stocks that we'll be getting you advice on. RCF is the first stock up for discussion. We will be getting expert views on CEAT as well as tell you what to do with India Bulls Housing. Not just that, we also have our portfolio advisor segment, and today Shilpa Priya, it's your lucky day. We will be discussing your portfolio on the show. Time to bring on board our experts then, and joining in on the technicals, we have with us Rajesh Agarwal, Head of Research at AUM Capital, and rather on the fundamentals. And on the technical side, Aditya Agarwal, Manager Technical Research at Yes Securities, joins in. Gentlemen, welcome to the show. Well, let's get things started by getting the first query on board, and this one is on RCF. It's been sent in to us by Amit Kukreja. He says he's bought 485 shares of RCF at a price point of 102 rupees. The question is, does it make sense for him to stay on and invest, or should he completely book out? Well, let's find out how exactly he should be approaching this investment. Does it make sense for him to stay on or not? Well, let's get an advice on the fundamental side first. What exactly would be your view, Rajesh? Do you believe that a lot of factors such as the overall positive monsoon, etc., could bode well? Our investor here is losing out quite substantially.
Yes, I do agree that the loss is quite substantial, and the performance of the company is also not that good. The numbers have been pretty bad. Q4 numbers were down by around 45%, and I don't find any reason to believe that the numbers are going to be something better in the near future as such. The only positive point is, one, the company is trying to restart their methanol production, which considering the fact that chemical sector is an uptick, might add to some margins, and two, they have a huge land bank which they are going to monetize in future. You said it right that the monsoon is good and that may add to something. So I would say stay on with the stock, wait for a price target of maybe around 80-82 rupees and book losses at that point of time.
Okay, that's the view coming in on RCF. The numbers as well were just about disappointing. The only perhaps positive trigger would be the upcoming monsoons and how exactly it would bode for all of these fertilizer companies. Aditya, let's get in your view. You know, it's not really done much for investors, especially if I look at it from a 2018 perspective. In fact, from levels of about 100 rupees, it's now at 70 odd rupees. So how exactly are the chart patterns looking for RCF?
Absolutely right, Mubina. Stock hasn't done much in 2018. Rather, stock is down significantly. But following this correction that we have seen in the stock is now making a falling wedge pattern, and a falling wedge pattern for a rising stock is a bullish pattern. So I'm looking at the stock to consolidate even at current levels. Also, if I take a look at the indicators, RSI that is making a positive divergence on slightly medium-term charts. So combining the positive divergence on RSI and the bullish wedge pattern on the stock RCF, and since the gentleman is also sitting at a huge loss, I would suggest hold on to the stock at current levels. Stock is on the verge of a breakout from that resistance zone of 75 to 80. The moment it breaks out from that zone, probably stock can test levels of 95 to 100. That would be probably a good place to book out profits or slightly book out losses. He can look to average also at current levels, which will bring down his cost, and wait for a breakout on the upside. So all in all, I'll suggest hold on to the stock or probably average at current levels and wait for a breakout above 75 to 80 and book out profits close to about 90 levels.
Okay, so Aditya is advising that you should even consider perhaps adding in. It would help average out your cost price, and then of course consider selling at a later time when the stock is once again on an uptrend. Next up, we have a second query coming in from Churchill Jain. He is from Madhya Pradesh. Now he says he has bought 1,000 shares of CEAT at a price point of 1,600 rupees per share, and he wants to know if he must average out or book losses. He has a medium term view. Well, he's made quite a hefty investment of about 16 lakh rupees in CEAT. The company, however, has been a wealth destroyer, especially given the fact that its main raw material, rubber, a part of crude derivatives as well, those have seen an uptick. And in fact, in the week gone by itself, we have seen significant carnage come by, especially in tire stocks. CEAT as well was no exception. However, in terms of growth going forward, Rajesh, what is it that you believe CEAT can deliver going forward? And do you think that Churchill should hold on, or should he just exit this counter, perhaps look out for more lucrative investments?
Definitely, yes. You should hold on to the stock, considering the fact that auto numbers month on month have been quite exciting. If you look at the numbers given by auto companies today, they itself talk about the kind of vehicle sales going on. And if vehicle sales is going on, CEAT being an OEM supplier is going to be directly benefited. Yes, you said it right. Rubber prices are on uptick, and that's putting a pressure on margins. But we should not forget that the company has delivered quite a good numbers in fourth quarter also. Bottom line has gone up by around 15%. Demand is improving. The plant is currently operating at optimum level, and they are planning an capex of around 200 crores, and the new plant is going to start by third quarter of 2019, and that's going to add to the numbers again. I would say stay on to the hold, stay on with the stock.
Okay, the fundamental call is that you should look to stay on to the stock, and there are quite a few triggers that could be beneficial in the long haul. So it's clearly a hold coming in. 1336 is where the stock is currently at, but let's take a look at the technical charts, and it's been a little bit of range bound move with a slight negative bias over the long haul. The last 3-month chart reflects that, and over the last 6 months as well, there has been quite a bit of erosion. So let's understand whether or not it makes sense to stay put. Aditya, what's your advice? Do you think that we could see this kind of a downward drift continue, or would you too, like Rajesh, believe that for the long haul it would make sense to have the stock in the portfolio?
Avan, I have a different view from Rajesh. Currently, stock is looking weak to me on the charts, and expect this downward trend to continue for some time, at least for a few weeks, 3 to 4 weeks. I don't see any major upside in the stock. Same goes with most of the tire stocks. Most of them look weak at the moment. The only one which stands out and looks slightly bullish and strong on the charts is Balkrishna Industries. So for me, recommendation would be to exit from the stock even at current levels. I know the gentleman is sitting at a good loss, so if he can has a heart to book out losses at current levels, I would recommend book out loss and look to get into Balkrishna Industries, which is actually looking better on charts if he wants to play the tire stock.
Okay, that's the word coming in. It's a bit of a divergent view. There would be perhaps a better option within this space. Booking losses at the current levels is the advice. I hope you've taken note. Well, next up, we have a query coming in on Indiabulls Housing. Churchill Jain from Madhya Pradesh says he's bought 1,000 shares of the stock at a price point of 1330. Does it make sense to average out book losses? He would like to know what the outlook is for the medium term. Well, let's understand what exactly your view is. Then, Rajesh, get in a sense as to how you're looking at this company fundamentally. Do you believe that based on the kind of movement we've seen of late, that perhaps it would make sense to put money in another stock? 96,000 is no small sum of money. What are the fundamental prospects? Are there going to be any triggers that we see that could turn around the prospects for the company?
See, the numbers have been good. 23% jump in bottom line in Q4. Loan growth has been good. AUM has grown. Housing finance sector as such is looking good. And with the government focus on affordable housing and housing for all, these kind of things, I think housing finance companies are going to do better. If you even look at the valuation, it is trading at around 13 times FY and 19 earnings. So I don't find any reason to believe that fundamentally the stock is weak. I would say stay on with the stock, but I would also like to add that there are better opportunities available in this space. Maybe a DHFL or a LIC Housing Finance would be a better bet.
Okay, that's the take coming in on Indiabulls Housing Finance based on the overall fundamentals. But let's understand what the outlook is on the charts as well. And Aditya, would like to get in your view as to how you're looking at this stock based on the kind of trends that we've witnessed off late, especially. In fact, you have seen the stock that has been in a mild recovery mode over the past few days or so. But it's been a sort of a range-bound move over the last 1 month. Do you think that the tide is going to favor our investor here, that we could see a turnaround in fortunes and there is a chance that he could perhaps break even?
So since the gentleman's requirement is from medium term perspective, I'm not looking at a too long term time horizon charts, and if I take a look at the immediate term trend of the stock, stock is facing resistance close to about 61.8% Fibonacci retracement level. That happens to be at 1275 odd levels, and in trade today stock made an attempt to test that level of 1275, but it failed to do that. So in the coming weeks, I would advise him to watch this level of 1275 cautiously, and if these levels are taken out on a decisively good volumes, then he can hold on to the stock. There is much more upside. He can see further 10%, 7 to 10% upside in the stock. But however, if this level of 1275 doesn't take out in next coming week trading session, probably I would advise him to exit from the stock because I see some correction in the stock coming into picture.
Okay, there you have it. That's Indiabulls Housing for you. I hope you've taken note of all the advice given by a technical as well as fundamental expert. And thank you for sending in your queries. Keep sending them in. However, we'll slip into a short break right here on the show. But as promised, when we come back, we're going to be discussing Silpa Priya's 12 stock portfolio. Don't go anywhere.
Thanks everyone for staying on with us. We're addressing all of your queries, and now it's time for the Portfolio Advisor segment on Buy Now Sell Now Weekend. Let's get straight to it. Today we will be discussing an entire portfolio, giving you advice exactly how to approach it. Silpa Priya, let's give you a snapshot. She's 36 years old. She's an employee and has a long-term time horizon, and there's a whole host of mid-cap stocks in the portfolio. So let's run you through the names. First up, there's about 20 shares of Muthoot Finance. She's also got Reliance Industries at 920 rupees. Sunil High-Tech features on the list, quite a hefty quantity at that. 4,500 shares is what she's picked up, and clearly losing on that one. Moving on, Sun Pharma is in the portfolio as well at 540 rupees. There's Tata Investment Corp that also features on the list. There's Yes Bank as well, and she's holding 10 shares at a price point of 316. Meantime, there's Exide Industries. 100 shares have been purchased by her, 220. There's also Tata Motors at 417 rupees. M&M features on the list. Interesting, given that we've seen a lot of auto sales numbers come out of late, so we can get a view as to how she should approach some of these counters. There's Zuari Agro that's on the list. From the sugar pocket, Balrampur Chini, 50 shares have been purchased at 158 rupees. And finally, there's UPL, bought at a price point of 728. Well, you win some, you lose some, and that's exactly what's happening with Silpa Priya's portfolio. Rajesh, a clear mix of large and mid caps. Let's grind it down. Talk about the first three stocks in the portfolio and what your long-term outlook could be. Muthoot Finance has been picked up at about 507. Reliance Industries, I assume, would be a keeper in the portfolio. She's bought it at a level of about 920. And what do you think is the verdict on Sunil High-Tech? Do you like the fundamentals? Because now the stock is a penny stock.
Yes, so you said it right. Sunil High-Tech has become a penny stock because a lot of adverse news, and we believe that the news are going to be bad in coming days also, and we don't find any hopes in the stock. So I would say cut your losses, get out of the stock. You never know when it stops trading or something of that. Other adverse measures are taken by the exchanges, so it's better to exit. As far as Muthoot is concerned, with gold loans going up, I think the company's prospects are good. One can hold on to the stock, and the other one is Reliance. We have seen fantastic numbers being provided by the company in Q4. Not only the petchem margins have gone up, GRMs were good, Jio is doing well, and based on prospects of Jio for a long-term horizon, maybe 2-3 years down the line, we have a target of 1150 odd rupees. But in the short term, we would say 1050 would be a better target in the next 1 year or so. So get out of Sunil High-Tech, stay put with Muthoot and Reliance.
All right, so it makes sense to exit Sunil High-Tech. Like Avan said, it's now become a penny stock, but hold on to Muthoot Finance as well as Reliance Industries. Next three stocks in his portfolio: Sun Pharma, been a big loser, not only for him but for many others. Tata Investment Corporation, a stock we don't talk about very often. And Yes Bank from the private space, where he is making some good money. Rajesh, what is it that you would recommend on these three stocks?
See, Sun Pharma, as you said it right, pharma as a space has been a dragger from a very long time. Most probably after Trump took over. And I think this is going to be there for some more time, but we should not forget the valuations have become attractive. The stocks were trading at a highs of 25, 30 times earnings, and now they are trading at earnings of 15, 16 odd times. And Pharma has given good set of numbers in this quarter. And we believe that all the bad news has been taken care of. Maybe some USFD announcement in the future might take some toll, but still, on valuation parameters, we think one should continue with the stock. It may move from here. The second one you said Tata Investment. This again is a holding company for Tata Group of companies and some other stock. The valuations of which are around 50% of the 200% of the market cap of Tata Investment. I would say stay on with the stock for maybe another 15-20% from the current market price. As far as Yes Bank is concerned, quarter on quarter the numbers have been good. CASA has been improving. They have been focusing on retail assets, and the management has said that they are going to grow by around 25-30% annually, and we believe that this is a stock which one can even buy on dips.
Okay, that's the word coming in on the rest of the stocks. Sun Pharma, Tata Investment Corp as well as Yes Bank. Let's nail it down to the next set of stocks and what should be the outlook. Is it promising for an Exide Industries? How are you reading into the kind of auto sales numbers delivered by Tata Motors? They were fairly promising. And do you believe that M&M is on the right track for growth given the kind of tractor sales volume as well as overall May auto sales numbers? And she is making some good money on this investment.
See, all these three stocks one should hold. Exide, as you said, it's doing well. The numbers have been pretty well, and with the kind of numbers we are seeing from the auto month on month, we believe that the being an OEM supplier, Exide is going to be benefited due to that. Moreover, it has holdings in insurance venture, which is again going to give good returns when the IPO comes. The second one you said M&M, both segments, the rural segment and the passenger car segments is doing well. Tractor numbers are good. Even the new launches has been taken well by the market. And the third one, Tata Motors, has been a drag from quite some time. But we believe that all the negatives has been discounted. The JLR numbers have been bad, but if you look at domestic numbers, domestic car sales has been good, and that's going to add. Valuations, speaking of valuations, trading at a much lower valuation when compared to other listed peers. So I would say stay with all the three stocks.
Okay, so stay put with all three. Yes, you may be losing some money on Tata Motors, but I guess all the bad news is already in the price. And the last three stocks, all three seem to be linked with the agri space. The Zuari Agro bought at 555 rupees. Yes, this company did not deliver a good set of numbers, especially on the margin, high costs, etc. have dented margins, but bought at 555. Losing money over there. Balrampur Chini as well is a big loser. In fact, it's almost halved from the buy price, and that's the case we've seen with a lot of stocks in the sugar pocket. And finally, UPL bought at 728. Rajesh, losing money on all three counters. What's your view?
Zuari Agro is a sell. The numbers have been pretty bad. No hopes the numbers would be good in near future. So I would say get out of this stock. The second one is Balrampur Chini. Sugar pack as such is not doing well. And there is news of overproduction. The cost to the realization cost is very low. I think one should stay with Balrampur Chini for a target of maybe 80 rupees in the short term. The third one is UPL. Yes, it's underperforming, but very kind of monsoon news. That's the normal monsoon. The government's focus on rural economy and the MSP price being increased. I think this company is going to do well. So one could stick with UPL for a longer term horizon. Balrampur one should book around 80, and Zuari Agro is a sell.
All right, that's the entire check coming in on the overall portfolio, all of the tweaks and changes that need to be made. I hope you've taken note and that you will be making changes to that portfolio. But do remember that this is only a model portfolio that's been recommended, and you need to consult your individual investment advisor before taking on board any decisions. We're going to be getting wealth creation ideas from our guests, as well as some technical takes as well that you can watch out for. Aditya, let's get the ball rolling with you. In terms of technicals, what exactly are the stocks that you would watch out for? What's catching your eye?
So I'm picking up two buy calls. The first is Maruti Suzuki. The charts are extremely bullish out here today. The stock broke out from a consolidation zone on fairly decent volumes. I'm looking at a target of 91.30 here, keeping a stop loss at 85.80. After long consolidation, stock seems to have resumed its uptrend, and it's headed towards 91.30. The moment it breaks out of that 91.30 zone, I'm also looking at high levels of 9500. The second stock that I'm recommending is Marico. So stock has been consolidating in a triangle pattern, and in trade today it has shown some signs of breakout from that triangle pattern. I'm looking at a target of 335 here, keeping a stop loss at 316. Next week, if stock continues to trade above 320, 325 levels on fairly decent volumes, I expect the stock to test levels of 335 and then head high to 345 as well. So buy calls on Maruti and Marico.
Okay, Maruti, Marico, both buy calls, of course, on the technical side. But for those investors who want to keep their money in the markets for the long haul, Rajesh, tell us what would be some interesting wealth creation ideas and what's your rationale?
The first one I would like to recommend is CESC. This company is basically into power, retail, property and IT. They have announced demerger of their division, and the company will be divided into 4 parts. The numbers have been quite decent. Full year consolidated EPS has come to around 75 rupees, and that makes the valuation extremely attractive, considering the fact that Spencer with 120 stores is doing well. It's turning into EBITDA positive, and they are planning to expand more stores. So I would say buy CSC for a target of maybe around 1200 rupees in the next 1 year or so, pre-demerger. And the second one is AU Finance. This again is an NBFC which is focused on small car, MSME, and vehicle finance, and they have recently got a license of small banking. They have huge number of branches, more than around 700. Q4 numbers were good. NPA is going down. And the best part is the management is quite conservative, and they are very focused on the growth. We believe that this stock can touch 800 rupees the next 1 year or so. So I would recommend buy with AU Finance with a target of 800 rupees.
All right. On that note, Rajesh as well as Aditya would like to take time out to thank you for joining in, advising our viewers as well as giving us your long-term views on the markets. And on that note, it's a wrap on this leg of Buy Now, Sell Now weekend. Thanks so much for watching and have a great weekend.